My name is Eduardo Greco. I am the head of Latin America at Utilico Emerging Markets Trust. We are here to discuss the South American election cycle for 2025 and 26, what it means for political stability, economic growth, and most importantly, investment opportunities. As we navigate this crucial period, understanding the macroeconomic and political landscape will be key to making informed investment decisions. Let's dive in. 2024 has already set the stage for significant global political shifts, and South America is no exception. The region is heading into a major election cycle, with political dynamics that could reshape market sentiment. One of the most notable trends is the decline in leftist support, a shift that became particularly clear with the election of Argentina's Javier Milei, a leader whose market-friendly stance stand in contrast to some of his regional counterparts. At the same time, approval ratings for key left-leaning leaders in Brazil, Chile, and Colombia are declining. In Brazil, President Lula's disapproval now exceeds 40%, while Gabriel Boric in Chile and Gustavo Petro in Colombia are also facing significant opposition. This rising sentiment towards center-right governance could have major implications for market policies and investor confidence. From an economic standpoint, South America presents both opportunities and challenges. Growth forecasts are moderate. Brazil, Chile, and Colombia are all projected to grow between 1.7% and 2.8% over the next 2 years. However, inflation remains a pressing concern, influencing both fiscal and monetary policies. Debt is a relevant concern in the region, particularly in Brazil, where structural reforms are needed to address the high deficits that are driving debt towards 98% of GDP by 2029. Chile shows more stability, keeping debt near 42%. Colombia's debt is expected to peak around 57% in 2027 before declining. Still, fiscal imbalances and market volatility remain important risks for investors. Despite these challenges, there are opportunities. Argentina's market boom under Milei is an example of how reform momentum can drive investors' confidence and re-rate undervalued markets. Let's take a closer look at Argentina, a country that has undergone a dramatic economic shift. Under Milei's leadership, inflation dropped significantly, from a staggering 289% in April 2024 on an annualized base to an estimated 85% by early 2025, and it is expected to continue to go down throughout the year. Argentina also achieved its first fiscal surplus in over a decade, a strong indicator of economic stabilization. This turnaround had a direct impact on market performance. In 2024, the S&P Argentine ADR index rose by 160%. MSCI Argentina surged by 117%, and the S&P Merval gained over 113% in US dollar terms. Additionally, the Argentine peso became the strongest currency in Latin America in 2024. What does this tell us? Pro-market reforms can quickly restore investor confidence and drive substantial market gains. More importantly, Argentina's case suggests that other undervalued South American markets could see similar re-rating if structural reforms are implemented. Looking at the broader South American markets, valuations remain historically low across key economies. Chile is currently trading at 10.5 times forward price to earnings. Brazil, excluding Petrobras and Vale, sits at 8.6 times. Colombia appears to be the most undervalued market at just 6.8 times. All of these valuations are well below historical averages, highlighting potential upside if investor sentiment improves. As we approach elections, history shows that market begins pricing in political shifts 12 to 18 months before voting. The road ahead will depend on three main factors: pre-election polls, government approval ratings, and the overall macroeconomic environment. Markets will adjust their expectations based on how likely political change appears to be. To wrap up, the South American election cycle brings both challenges and meaningful investment opportunities. The key message is simple: low valuations and political shifts are opening a window for strategic investment. The big question for investors this year will be getting the timing right, as sentiment can change quickly. In the meantime, the region is home to many high-quality companies with strong competitive advantages and promising long-term potential. These businesses are well positioned to perform across a range of different election scenarios. As of January 2025, Utilico Emerging Markets exposure to Latin America is around one-third of the portfolio.